Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time. It is Wednesday, and that means we get the one and only Matt, the mortgage guy. How you doing, sir?
I'm good. It's good to see you. Hopefully you're feeling better.
I am, man. Yeah, Monday was rough, but 15 hours of sleep will make you good, and I feel great today. Thank you. Thank you for asking. So what I wanted to talk to you about today is first is mortgage rates. They've been all over the place, generally higher. We got over 5% for owner occ, 6% for investors. Last week had to be a bloodbath. This week, I'm going to guess a little bit better. But
Right.
you're the man in the middle. So what's going on?
Yeah, and it's funny too. Before I even talk about that, like just the mindset of the consumer is funny because you see a little bit of green, you see a little bit of betterment. Like here we go. We're going to be at when are we going to be at 3.99, right? And you remind them that the upward trend is still an upward trend. Everything, that's going on with quantitative tightening, like rates are getting higher over the long term. We can have a good day or two, right? And what I've tended to look at, because it's a good average, is just, that national survey that Mortgage News Daily puts out there. Mm-hmm. Thursday and Friday were bad days where I think this national average number was like 5.25 Wednesday, and then 5 3/8 Thursday, and then 5.5 by Friday.
Oh,
and
I saw that.
We had two really good days, Monday and Tuesday, where we basically went back down just like we went up, where it's like, okay, back to 5 3/8, back to 5.25. Again, like 30-year fixed primary stuff, little to no points. But, just as kind of a gauge of where the 30 years at, or where mortgage rates are at, you can confidently say about 5.25, about where we were last Wednesday after we had a steep climb Thursday, Friday, and then, the same trajectory on the descent, which I wouldn't count on, trying to time interest rates. I wouldn't count on too many green days. Everything I'm reading and hearing about the trajectory of mortgage rates and quantitative tightening and everything the Fed has done, is doing, and will continue to do, if they start selling off as aggressive as they were buying, like 30-40 billion dollars a month is a game changer. The Fed has a big, strong lever that they can pull.
Yeah, they were the largest buyer. And when the largest buyer becomes the largest seller, that is market moving. It just is.
For sure.
It doesn't matter who it is. It could be Kathy Wood and some, Roblex, or it could be the Fed with mortgage-backed securities. It's the same rule. When the biggest stops buying, and when the biggest stops buying, that impacts the market. But when the biggest stops buying and starts selling, this is the first time in my investing experience the Fed can play with the front end and the back end, right?
And I guess for the average consumer to think about it, and me to put my kind of 2 cents in on this, because people ultimately want to know, okay, Matt and Mike, what's happening to interest rates? What should I expect? I think that a lot of stuff is relatively baked in, and we know some of these moves are coming, so I wouldn't expect as quick of a trajectory as we've seen.
Yeah, I want to talk about that real quick, because in the daily financial news, I talked about this, knowing I was going to speak with you today. There was a survey. I think it was Bankrate did a survey of consumers on mortgage expectations. And the overwhelming majority thought they would hit 8% this year.
Right.
And I looked at that and I said in my daily news, I don't think so. I think what consumers are doing is a recency bias. They saw it go from 3 to 6, and they're like, oh my God, it's going to go from 6 to 8. It's just gonna, because it's just gonna.
Right.
I'm like, I mean, certainly maybe, but I don't see 8% this year.
Yeah. I'm in a mood to be brutally honest. Some of these surveys are so stupid. Yeah. Right. Like a rent survey asking people who don't own rental properties, what would you rent your primary residence at? Dumb, stupid survey. Asking the average consumer, like, hey, throw up a guess. What do you think interest rates will be at by the end of the year? A dumb survey, right? And so, like, I've seen that same thing too. And people are genuinely concerned about, like, can they reach 8%? And it's based on like next to no data at all, and just like a wild guess, right?
Oh, no,
and
it's all recency.
Yeah,
like
could the 30-year go to 6 or 6.5? It could, right?
No,
Would it,
yeah.
can it go to 8 by the end of the year? So very unlikely, in my opinion.
Oh, yeah.
Not very likely at all. I wouldn't be surprised if we saw it slowly trickle, kind of dance around in the 5.5 to 5.75 range and stay there. I'm not saying that's what's going to happen, but like to go all the way to 8 just seems like a stretch. Like most things we watch in mortgage, there's the expected and there's the unexpected, right? Like all the stuff the Fed's doing, the Fed's funds rate, up in May, up in June, up at like every meeting they're going to have for the end of the year, expected, right?
Yeah.
If they go like 75 instead of 50, if they announce something about, hey, we're going to, sell at a faster pace than we talked about, those are things where it can be market moving because it wasn't necessarily expected or quote unquote baked in.
Yeah. So let's put a pin on that one or a finer point. I want to be very exact. We both now believe the Fed's going to raise 50 basis points May 4th, correct?
Correct.
Right. That's 50 basis points on the Fed rate going from 0.25 to 0.75. How much of that do you think is already banked into the 30-year mortgage?
Most of it.
Most of it being 80%?
Yeah.
Yeah, I would think so. Yeah. So what this means, folks, and I agree with Matt, the Fed goes up 50 basis points on May 4th. The 30-year mortgage rate will go up, but it'll go up by single digit basis points, not 50, right? We're not going to go from 5.25, which you just shared is kind of where we are today, to 5.75s. And I think a lot of consumers don't know that. I don't think the consumers realize what we have seen in the 250 basis point move already is the mortgage market leading the Fed. It's a leading indicator versus a lagging indicator, right? We will not see a 1-to-1 ratio of a 50 basis point move on the Fed with a 50 basis points on mortgage on May 4th. I just don't see it.
Right. Not at all. Yeah. And just kind of square up the math that we talked about, if it's going up 50 basis points and we say 80% is baked in, then like a 0.1% increase, 20% of that, maybe we go 5.25 to 5.35.
Right.
And it's not the only thing that's being, calculated or factored in here. There's 1,000 other factors that might better rates, some uncertainty in some country or some, geopolitical thing that we don't even know about yet that happens in, June is going to make rates worse or better. And so, upward trajectory, I hate like putting guesses out there because they're always wrong, but people love them. And so like, if you were to tell me or have me like say, what are rates going to be in Q4 and the end of this year, I'm going to say somewhere around 6% on a 30-year fixed. Yeah.
If the over under was 6% on December 31st, I would have a tough time taking the over or under. That would be
right. It's a good line, right? It's a good line where, if it ends at 5.85, not surprised. If it ends at 6.23, not surprised. But, that's 6% is probably a good line for the end of the year.
Yeah. So I think the Fed's going to get the funds rate to 3. So I'll take just the over. Like to me, 6 to 6.25 end of December. That's not calling the peak, right? We might get a little more next year, but I mean, so many things would have to go wrong to get 8% 30-year money this year. The market, generally doesn't move that fast.
Yeah. Let me ask you a question because you asked me rate questions. I'm going to ask you one. Yeah. Earlier in the year, I did the video about 2022 predictions, and it had some information from Barry Habib. Yep. And so now, like everything we're seeing and hearing is like, we're moving into recession. We're going to see a recession within the next, X number of months. The thinking that Barry had then and continues to have is that we'll have all these Fed rate hikes and we go to 3, 3.5, 4%, whatever it is. Once we go into recession, in order to help pull us out of recession, they're going to be able to go back the other way and pull rates back down. And so maybe last time we kind of touched on this briefly, you were thinking it's farther out. Like, how soon do you think that they could start to do those things that are going to cause interest rates to come back down?
So I put out I have a brand new playlist called Whiteboard where I brought my 2022, 2023 economic thoughts together. So I do not think we have a recession until Q2, Q3 or Q3, Q4 of next year. assuming it's Q3, Q4 of next year, the Fed won't do its first cut, in my opinion, till very late in 23, but probably early 24. The problem with the Fed this time, and why they're not going to bail out the stock market when it falls another 20%, why they're not going to bail out a flat housing market, why they're not going to bail out unemployment doubling, which is everything that I have in my expectation, is because inflation is the problem. They have to get inflation back to under 3% and ideally under 2.5%. And Jerome Powell quoted the scariest thing last Thursday, and it's why the stock market tanked. He basically said that the reason Paul Volcker broke inflation is he stuck to his guns. And he said, this Fed is going to do it this time. So as I've said forever, Jerome Powell does not want to be the transitory guy. He's not going out like that. Now, this is not a common belief. A lot of people expect him to wimp out. A lot of people expect him when Wall Street cries, he's going to bend over. I don't see it this time. I just don't. And I have no evidence because every other time they have. But I think it's very much, it's just this, everything I've been saying, it's the 70s on repeat, and it just keeps getting clearer and clearer. It's like, nope, it's the 70s again, right? And I said it a couple 6 months ago that I think Jerome Powell gets fired or resigns, and they have to bring in the Paul Volcker guy to like, no, we're going to break it. I don't care. Yell at me, scream at me, yell at me, call me an idiot. I don't care. I'm not doing it.
Right.
So, yeah, I don't think we lower until 2024. So later than Barry Habib thinks, I'm guessing.
Right. Yeah. I think I'm somewhere between you and Barry.
Is Barry still this year?
I think it might be late this year, early next year, but it's really soon, right?
Yeah, that's what I've watched this stuff. He was
too soon for me. And I'll have to check in to see where he's at lately. But yeah, he might be like Q4 22, Q1 of 23. You're like Q4, Q1 of 23, 24.
I'm 12 months later.
Somewhere in the middle.
Okay. I think
smart guys I like and respect. I'll just pin myself in the middle.
Genius move. Do me a favor. Where can people find you?
Go to greatmortgagebroker.com. Fill out that form. Let us know where you're at, how we can help. My team is ready and dialed in to help you out. Bunch of great feedback from people all over the country. They've been getting help from the team. And so continue to reach out to us, greatmortgagebroker.com. We're here to provide a great experience, whether it's purchase or refinance.
Absolutely. Thanks, buddy.
Thanks, Mike.